mean, just bear in mind, if you're ever approaching an investor, they've got a billion things to do that week.
Yeah.
All right? They've got their family to take care of. They've got a whole bunch of investment proposals to wade through. They have to go to the dentist. And they're just human beings. And so if they get the slightest sense that you're bullshitting them, then they're not going to be interested. In jurisdictions where capital is trapped, then or mandated, then you have a little bit more slack. So you don't have to be perfect when you don't have to be perfect. You have to be perfectly differentiated when you deliver. But just if you approach it understanding how the investor thinks about it, then you're far less likely to just turn them off, and far more likely to for them to remember you. And honesty and being transparent and not overselling, I think, is one of the easiest ways of establishing an unusually direct, clear relationship with a potential investor.
I think what I found personally be extremely difficult is explaining Ethiopia. Like you mentioned, this is my money. And partly, we don't even understand the complexity of our country's sort of regulatory framework. And then, of course, when it comes to risk, like any aspiring startup or company, we want to grow, build something that's impactful and eventually profitable company. And I guess the part of the challenge is the stories that we are telling ourselves also. We are extremely hopeful, right? By next year, by next month, by next 2 years, I'll be growing with this factor, 10x, 5x, 2x, or what have you, right? When that doesn't happen because of so many factors, and then that kind of almost I think probably one takeaway for me is the type of investors that should come to Ethiopia, that will come to Ethiopia, should have that sensitivity or deeper understanding of the landscape, and they also have to have this long-term look into, what, I'm going to invest, but then again, I know it's not a short-term sort of transactional activity where I can put it anywhere else. So I think that is very important. We don't waste time, and we don't waste their time as well.
They don't come back until the people have changed inside the organisation.
No, totally.
But so we haven't. Africa hasn't really told its story for a long time. Right? We're starting to tell our story in our own way, and I think back to the point I made earlier, I don't think we've really decided what kind of story that looks like in the future yet. We're also super optimistic. We're all very passionate about it. But you need to be that story needs to be told and retold amongst Africans and Ethiopians and East Africans until it's sort of refined into a real story that actually describes the future for as many people as possible. And importing again somebody else's narrative and approach to how you describe your story is. May not be what we want to do, but at the same time, if we want to attract capital from outside, that's how capital from outside thinks. And it's very easy to get to get carried away with your own story, right? So those people responsible for selling the Ethiopian investment story to the outside world have got carried away with their own story. It's going to backfire. But as individuals running a business, it's the same kind of risk. In the end, you believe your story, and the only way really to manage that is to have very detailed plans, so that you're not just telling a story and not making progress. You have very clear milestones in your plan, all the usual sort of management system stuff. So that in the end, as you deviate, you can start to explain and understand why you've deviated. The other thing I would say and what I do say to people who come up and ask, what do I think about investing in Ethiopia? I say, you just need to make sure you understand some of the things I've mentioned earlier on FX and the approach to the private sector. But if you're importing a sort of startup budget from your businesses in Kenya or Norway, whatever it is, then it's not going to be right. And as a rule of thumb, everything takes 3 times as long and costs 3 times as much, and you need 3 times as much working capital to weather the operational risk in the business. And I think that's the kind of you may or may not agree with me. But I think if you bring that degree of sort of reality to the initial assessment, then people respect the balance of the views that you explain, like what the upsides are, and that kind of thing. And the truth is, once they start budgeting for that, if very few people are really budgeting on that basis, so most foreign investors give up and go away. Most startups give up and go home. But those who do budget really sort of robustly and conservatively, both in terms of cash and manpower in particular, then if you over budget for all that kind of stuff, and I know it's difficult to fund it, but if you over budget for that kind of stuff, then you will make your way through. Because in the end, there's nothing new under the sun.
Yeah.
And if you are one of those people who's sort of over budgeted for those sorts of risks, then you make it to the point where you become sustainable and viable, and you really are looking at growth. And anyone who started at the same time as you who didn't budget that way is gone. So that is the real opportunity currently, which is perverse and unfortunate, that there's a quasi-monopolistic opportunities for everyone who makes it through that sort of early stage, whether you're a small whether you're a startup company or a foreign investor coming in. So in the end, the returns are commensurate for the, I think the returns are commensurate for the investment you make, if you make the right investment.
Paul, for the sake of time, and also I want to open up the floor. I know many people would have questions for the benefit of contemplating and creating dialogue. Let me pause here. Thank you very much. That was extremely insightful. I'm going to rewatch the conversation again.
Oh, don't do that.
I'm going to.
It won't make sense. It won't make sense second time.
I'm going to come back with several questions. Let me open up to the floor. Anybody has any question at all? At least I'll take about 3 questions, first round. Okay.
Oh, God.
Shall we bypass them? All right. So.
My question is, what's your thoughts on the consolidation of the banking sector? Obviously, the national bank governor has said he does not like the fact that there are 30, 50 banks popping up this year, and he wants them all consolidated. Do you actually think mergers and acquisitions are going to happen within the banking sector, and if so, what timeline?
Yeah, so, I mean, the statement that he made a couple of weeks ago, which said we will forcibly consolidate banks in the future.
In the near future.
Speaking for him, which I can't, that's not what he meant. What he was doing, he was actually putting up a signal which says there will be consolidation in this sector over time. So I don't know for sure, but I mean, I've actually implemented this kind of bank sector consolidation in a number of jurisdictions. And typically you have a 5 to sort of 10-year process of increasing disincentivization and incentivization to create strong winners and identify and isolate the weak losers. So it's a little bit odd that he's been encouraging more banks to open over the last couple of years. But I do know for sure that he's been thinking about how to create strong banks, in particular to ensure that when foreign capital and foreign banks arrive, that there are sort of Ethiopian banks which can sort of withstand that kind of pressure. So all he's really saying is that if we get to the end, towards the end of this process, and some of you guys, banks, haven't responded to the gentle caress from the regulator, which is starting today, then I will either liquidate you or forcibly consolidate you amongst either a weak one with a strong one or 2 weak ones if that might work out. So there will be M&A forcibly if at the end of the process there are banks who've refused to respond or whose franchises haven't responded to what needs to be done. But actually there's a whole bunch of other stuff that I suspect he's going to do, which will make it highly unlikely that actually he will have to mandate any consolidation. Because the bank presidents already are running around like blue-ass flies trying to figure out what the future looks like and what they have to do to be competitive. And in other jurisdictions, so in particular in the UAE, we spent a half day between lunch and 5 o'clock explaining the next 7 years to all of the bank CEOs and some of the major shareholders in the UAE. And there were probably 28 or something of them. And we finished at 5, and I then sort of headed back up the road from Abu Dhabi to Dubai. By the time I got back to Dubai, 12, 14 bank CEOs had actually called to say, what precisely do I need to do from tomorrow morning? Because the conviction of the regulator's strategy was so crystal clear, like any market, they responded immediately to the signaling that came. So he's going to, I think here we'll probably do it in a very Ethiopian way, but broadly speaking, banks have to sort of move to a more risk-based culture. They have to move to a sort of a broader sort of product and service capacity. They have to really build their capital base in a way that can be measured by international banks and by the Basel Committee, for example. And so CEOs' compensation structure and formulas will change. So they'll no longer be paid based on sort of statutory earnings and profits. At some point in the future, whether it's fully or partially, they'll be paid on a sort of more risk-adjusted basis. So if you imagine you're a CEO thinking about the bonus pot for my senior executives and then the next layer of executives down, the regulator is essentially going to say, I will control the size and the allocation of that pot. And it's not just going to be about statutory earnings, it's going to be risk-adjusted profits. So between now and the point where he might say, you guys need to consolidate, there's a whole lot of change that's going to happen. And you can feel it happening already. Yeah. So, I mean, generally, I sort of reserve most of my criticism for the central bank governor in this jurisdiction, but this is a really great signal.
Yeah. Even they increased the paid-up capital, from, what is it now, from 50 million to, what was that? To 5 billion. I think they added 1 0. So that also indicates they're just trying to discourage, the popping up of all these banks. But
for example, there's so many elements to this. So in order for the banking system to work properly, for example, there needs to be some kind of interbank market, right? So I'm guessing that many people in this room don't know what an interbank market is. I can tell you that a lot of bank presidents don't know what an interbank market is. So without that kind of specific change, then the way the bank market operates won't be able to progress. The capital markets require a whole bunch of ecosystem to develop, right? And this is a lot to do with, I think, how the bank regulation, what the bank regulation is driving to, is how do banks participate in the capital markets? So in most jurisdictions, big banks and investment banks have a market-making operation. So they have an obligation to provide, more or less, some kind of obligation and or a sort of benefit from providing liquidity to specific markets, both public markets and OTC markets. And the level of obligation and the benefit they get for doing it changes. But there's a sort of clearly there's a need for a source of capital to stand behind prices and to ensure that the spreads between quoted bid and offer prices aren't too crazy. So who's going to do that in this jurisdiction? And in most jurisdictions, it's banks. You do sometimes have independent market makers, but it takes a lot of capital. So that's the kind of change he's trying to sort of, if you think about what he's trying to do in a sort of 7 to 10 year time frame, he's trying to make banks think really hard about how they change their franchise and their risk mentality and activity. He has other obligations which maybe conflict with all of that, which is the primary one being financial inclusion. But I think the reason he can actually start to move now is that financial inclusion can be delivered, as we're seeing, as we speak today. There was another launch of Kacha. Is that it?
Kacha, yeah.
So financial inclusion is really the solution to financial inclusion is probably more about tech than bricks and mortar. So over the past, obviously, banks have been encouraged to sort of rent or buy or build premises, which is just crazy from a bank shareholder perspective. But the privilege of having a banking license means you have to respond to the government's requirements from time to time. So I think his announcement is probably one of the most exciting 25 minutes of my 6 years in Ethiopia, with my clothes on.
Okay. All right, Al. If you guys can tell us where you come from, what your name is, that would be great. So, yeah, next to Charanet.
Joseph, I'm founder and CEO of Reynolds, an advisory firm in Addis. So my question for is, in relation to the banking sector, again. So on the one side, we're seeing development in the fintech side where you're seeing firms like Kata, Chapa are popping up, and there is a regulatory change. On the other side, every day banks are opening branches, and they're still expanding branch networks. And and we're saying we're going to open the banking sector. So with this mentality within the banks itself, how long do you think it's going to take for them to understand and start to change? Assuming that the conviction from the central bank doesn't change for the next few years.
Okay, let's take two more questions. Masarat? Yeah.
So, I'm just curious. There is a lot of capital trapped here from the multinationals, as well as potential individuals, Europeans. What do you think are just number one and two key factors why this capital is not being deployed to finance SMEs and startups? And on the flip side of that, how do we make ourselves really attractive so that this capital actually can start flowing? What really key things that we can do to unlock that bottleneck?
Okay, let's answer these two, and then probably we'll give a chance for two more questions.
So I think there's a whole, to your question, Ms. Rett, there are sort of two real aspects to whether investing makes sense or not. One is the equity risk story, the company itself, and then there's the environment in which it operates. So to make yourself, I think in this jurisdiction, there's a limit to how attractive a small business can make itself relative to the regulatory burden, the policy burden, and the actual reality of the economic environment.
Yeah.
So to the first part of your question, the reason the multinationals don't sort of deploy their capital is because there's no one with whom to deploy it. If you deploy it, it's sort of stuck away for a reasonably long time, and you debate whether that's you can beat your old dividend stream and that kind of thing. But sort of more importantly, for the sort of high net worth-ish Ethiopian individuals, there are a bunch of other things that you can do, both legal and illegal, to maximize your economic returns. Okay, and so if you think about the returns you make on Burr in the bank as a deposit simply, then there's a whole bunch of stuff you can do with that, some of which is legal, formal, and some of which is informal, which bring your overall expected return to north of 40% in practical cash terms. So why are you going to invest it for 33% or whatever amount an investee might consider to be attractive when you're losing also liquidity? So the liquidity premium then makes that comparison impossible to square away. So, and that's before you think, and by liquidity, I don't just mean sort of pure liquidity risk. I mean, if you tie your money up for a medium-term horizon, then a lot of stuff can happen in that time frame. Whereas you're probably trying to sort of balance your portfolio as a high net worth individual in Ethiopia against a much shorter time frame. So in the end, the people I see, the Ethiopians I see trying to deploy their capital, are people who are religiously committed to the period beyond the immediate horizon, whatever sector it's in. They're not. It's not rational to do it. I mean, if you know what I mean. It's just not rational. It's not rational to run an early stage investment advisory business in Ethiopia, right? It's not rational. Why do we do it? Because we care and we think it's going to change. Or you do anyway.
We're crazy.
And then back to Yosef's question.
Yeah.
So I assume your name's Yosef. I don't know you very well. Knowing you for the last 4 years. So how long is it going to take? I think it'll be a lot. The changes, the manifestation of change will be a lot quicker than we think. But whether the fundamental changes come or not is probably going to be a lot slower. Not least, I mean, there is inertia from the banks. If I was a bank shareholder, I'd say, well, okay, hold your horses. Do we want to be in the top 5% or do we in the next 15%? Is it like upper quartile, median? Where do we want to be in terms of the evolution of the market? We just don't want to be one of those banks that the governor was talking about when he made his announcement. So how fast do you invest, both in technology and people? How fast do you open your capital structure up? So there's going to be there's always a delay. But in the end, the bank presidents know their jobs are on. They should know that their jobs are on the line, and their sort of family's wealth is on the line if they don't sort of move reasonably quickly. So the practical manifestations, changes which will really show that they're providing different products and services and they're measuring the risk across their portfolios, might be a bit slower. But my assumption is that by the time we get to next March, most of the banks will be like neck deep in really trying to figure out what their future looks like, or their options at least for their future look like.
Okay, let's take two more questions, and then it's just getting to be a little bit late. Okay, so if you can tell us your name and where you come from.
Hello, my name is Jersna. I'm a senior student at Sabah Science and Technology University. First off, most of what we did at this event was criticize government policies and the negativity of the obvious facts over what's happening in Ethiopia. And I don't understand what I took from this event because it's mostly criticism and it's mostly backhanded to the government should do this and the banks should do this. And I don't know how it's going to affect like what I took as a potential starter. And if the government and the policy is this much close for foreign investors, as yourself, sir, why did you choose Ethiopia instead of other open countries? I'm just asking out of curiosity.
Sure. Would you want to take
That's
the
pretty much it.
first?
Sure, let's take one more question, and then we'll come back to you. You? Yeah.
Thank you. My name is Stefanos, and I'm also a fellow inspired startup myself. So, following the answer given for her questions, so are we doomed? My question was I have another question, but after hearing the answers, I basically, generally, that's what I'm feeling right now. So the first is, what are we going to do? And secondly, as a startup, if we pass all the obstacles, the policy obstacles, the legal issues, and so on, and we found an investor, a general investor, and the depreciation value here. So the investor promises some money for the startup, but after a while, that money is nothing here in the practical sense. So, as a startup, what shall we put our mind on the financial aspect concerning this depreciation and uncertainty in the financial sector?
Okay.
I guess a couple of things. Probably it might sound like it's criticizing. It's not really criticizing. The way I look at it is we have to be honest with what we do. I invested in my company. That was my hard-earned money I saved from my work as a professional engineer working at Boeing. That's real money that I invested, and grew my partner, and we invested heavily, right? Hoping that the turn would be a lot faster, right? That didn't happen. So what did we do? We went back, raised additional money, promising investors, friend and family, and then additional investors. We promised them 24 months, we'll do amazing things, this and that. So part of the challenge is really understanding the Ethiopian landscape honestly. We are extremely optimistic. I am. Master, I can tell you, we are here because we believe in, we have a stake in this country, the country's growth, change, and what have you, right? When we incubated startups here in this innovation hub, we promised them that it is possible, but it is difficult. So which means you have to commit. It's like you start going to engineering school, I believe that's what you study, right? Because you believe to be an engineer, doing amazing things, but it's not easy. If any person, any individual considers creating a company, creating a business in Ethiopia as easy, I think we are lying to ourselves. But what that means is that once we are honest about the landscape, the operating environment, the challenge, but also we can look into the opportunities, the growth trajectory. Like 5 to 6 years ago versus 2 years, and even this year, I'll tell you, with explicit sort of wording that things have changed dramatically. Yeah, we have tremendous amount of challenge, but at the same time, there are lots of things that are actually working out for us. But are they the way we anticipate them to help us right now in the short term? Probably not. So what that means is that now, for example, Paul said one thing that's extremely important. We have resource locally. Now we need to figure out a way to unlock that resource so that that resource will be invested in the local landscape, right? Or reinvested for that matter. That's one thing. Another component is within the diaspora community, everybody's interested to come and invest. Where? Startups. People like you guys. People believe in the community. People believe in the country. That I will tell you with certain level of assurity that is true. But no hard-working individual is sort of given the person has several options to come to Ethiopia and just dump money, thinking that, oh, I believe in this country and these people. That just it's not practical. But things have changed dramatically the last 2-3 years. FSD is trying to change the game here locally. The reason why we have people like Paul or Vince or what have you is we wanted to really understand how can we unlock the potential in the country and us and individuals, but at the same time in the marketplace. Then we can be able to actually build a country together. So I wouldn't see it in a doom and gloom, but rather we have to be honest. I mean, we there's a saying that, out of every 10 startup, 9 fails. But that doesn't mean they fail forever. It means like they learn, they can rebuild the company differently, right? Or better. So probably that's just sort of the dimension, the narrative I want you guys to take out of this conversation. But it's hard work. You need to figure out what works. How can we make it work collectively? That's probably part of it is policy change, which is, I mean, we've seen lots of change. I'm sorry?
In our hand, the policy change, not in our
It's also a combination of things. For example, we used to not be invited to advise the government. Now we are. That's a huge change. They are just honestly wanted to hear from our side. What are the challenges of startups? What can be done collectively? Today, for example, I spent 2 hours with the minister. They're just trying to figure out what needs to be done from the government side so that we can try to figure out a way to unlock the potential. 6 years ago, that didn't happen. 5 years ago, I'll tell you, it didn't happen. Probably for Paul, it's just a little bit different because, he helped governments, advised governments, and also Moinco and other entities. But for us, from startup landscape and ecosystem, it wasn't possible. Now it has become impossible. So I think this collected voice, not to blame the government, but rather, what is the government? Government's sort of, it's constructed out of a society, right? It's not smooth and easy transition, but regardless, citizens are actually, the end of the day, who would be the government? You guys, right?
But it's also an evolving environment, right? So 4 or 5 years ago, then there was very little opportunity for groups like this emerging to have a collective voice, which would be expressed in a sort of concentrated, consolidated way, based on sensible discussion amongst themselves, and then sort of clear articulation of what we want as a private sector or different segments of the private sector. So we're also starting to practice being, that sort of level of sort of freedom and sort of the liberalization which we're experiencing. So, and if you look at any comparable, whether it's the Asian tigers 40 years ago, or even Uganda or Rwanda or Zambia or Tanzania today, everyone is sort of struggling with the same issues. How much of it is in my control? How can we influence government to sort of to actually follow through on its announcements about private sector being important and create the enabling environment? And I think one of the reasons here for outsiders like investors who come and then understand it is there are so many things that could be done simply and quickly by the government to sort of change the emphasis on the importance of the private sector, and for whatever reason they don't do it. At the same time, if we're getting into sort of as a community, we have an obligation to hold the government to account. We have an obligation. It says so in the Prime Minister himself said so. We have an obligation to hold them to account. We have an obligation to consolidate into associations or groups which can then sort of represent effectively, what we'd like to see. So, when talking to entrepreneurs about what they do, there's 3 things they do. They work in their business, on their business, and then importantly, which probably happens far less here than in many other jurisdictions, around their business, so as part of an ecosystem. Because if the ecosystem doesn't consolidate and express